Well, hello, everybody. This is Jeff Green from Profitable-Investing.com, and welcome to Super Bowl Sunday. I hope you're having a fun day enjoying the game. I'm recording this just as the kickoff's about to happen, so then I'm going to go watch the game, so it's going to be a great afternoon. Just want to go through this week's market timing with you. We can look and see on the market timing indicator that the daily has weakened. It certainly should have weakened given the fact that we had a 4% drop, but this is a sort of a lagging indicator, but we certainly want to pay attention to the charts in a little bit more detail. So let's just jump into this week's market timing and best stocks trading strategy for this week's trading of February 4th, 2018. Regular readers will know in last week's market update, I wrote that the market was strong, but let's not get complacent. The market was severely overbought for a significant amount of time. And we had quite a few threats come into the market that really started to get traders' attention this week. Like I just mentioned, it was knocked for a 4% drop last week, depending on how you measure it. It's within percentage points of 4%. But there was a lot of news going on. Apple announced the reduce or half reduction for its flagship iPhone. Frankly, that doesn't surprise me. I'm not sure how many people can really afford or justify even spending $1,000 for a phone when there are at least equivalent models out there. We had the controversial FBI memo come out and the arguments back and forth between the Republicans and the Democrats about who was lying the most. But really what this gets to, in my mind, is the fact that one of our nation's most uncontrolled agencies appears to be a little bit rotten inside and has its own agenda. So that worried investors also. So a lot of things going on, and you combine all that with an overbought market, and you can expect a drawdown. But the real question is this the start of a new bear market, or is it just a correction that will find its own legs, and we can get back to a market that's going up? Time will tell. I don't know, but let's take a look at the chart. So I'm going to go down here to the weekly market, and I'm going to try and put a 4% drop in perspective for you. If you click on this chart, it'll open in another tab. I have this tab open here, and I enlarge it a little bit so we can talk about it in a little bit more detail. So I'm going to jump down here for just 1 second. So clearly over here you can see the 4% drop in the market last week. It's a huge drop, but in reality it still is sort of in an overbought situation. The market's well above the 50-day moving average. It's just come off the Bollinger Bands here. But take a look back here in August of 2015 and late December of 2015. These are bigger drops, higher number of points, and a higher percentage than we experienced over here. But nevertheless, even though they were big drops, they really didn't knock the wind out of the market. You can see these long legs here, which show that there's still a bullish tendencies. And then, of course, early 2016, it just took off to where we are today. But the other thing I wanted you to notice on the weekly chart is here. Back in this time period, the on-balance volume never faltered. It was going up and then flat to going up for the last, 2 years now. So again, this drop here, although it appears big on the charts, the on-balance line has not faltered yet on the weekly basis. So the jury's still out as to the long-term impact of this drop. The other thing I want you to notice here is this volume, which was last week's trading volume, is right about the same level as the peaks of the trading volume when the markets went up. In similar fashion, this down drop here on this week, there was no increased trading volume there. This week and this week here had a little bit trading volume, but it wasn't significant. You can see this trend of average volume here. So you need to pay attention to how the market moves on expanding volume. And I just don't see it on last week's action. Although it's scary and it took the wind out of a lot of portfolios, it doesn't appear to be as damaging as that might be otherwise. Let's take a look at the daily chart. And as expected, you would expect to see more weakness on the daily chart because it is a shorter time frame. So there's the 4% drop over the week, Monday, Tuesday, Wednesday, Thursday, Friday, and then the air came out of the market. What I did on here is I drew several trend lines. I drew a trend line on the bottom of the channel of the stock market over the last since September. You can see on this chart. So there's a good 4 or 5 months of of daily chart here. This lower trend line will typically provide some support when the market comes down to it. It's currently at about 27 to 27 and a half, 27.50 right in this area. It's also a small amount of support in this area where there was 3 days of trading right around the 27.50, but the nearest big level of support is the 2700. So I would expect that the market would do some action sort of between where it is and 2700, and then we'll see if it finds some additional footing for a move higher, or if it's really a market that's going to go down. I think that everybody knows employment is up, payrolls are up. There were some disappointing earnings last week, but overall, the S&P 500 earnings have been going up. So, but the downside is that the dollar is under pressure and interest rates are going up. So we'll have to wait and see how this plays out to see what the demand for stocks are on the market. But again, I'll point out down here that even though we had a huge down day on Friday, the volume really didn't expand much above average. So it remains to be seen how the volume will work out. The on-balance volume on the daily chart is a little bit weak, but not as weak as you might expect. Momentum is certainly down, so at some point here you might expect a bounce up. How far it goes up is anybody's guess. So I just wanted to point you to these charts where you can get a very quick assessment of the strength of each one of the markets. Here's the VTI, which is the Vanguard Total Index. You can see that the daily is starting to get weaker. I imagine this will turn yellow maybe Monday. Here's the S&P represented by the SPY. And then you can scroll down here and see the strength of the different S&P sectors. That's very interesting. One of the things that I had 3 or 4 positions in that were stopped out over the last week or two was real estate. It was going great guns until sort of the end of the year, and then people started getting scared about interest rates. And slowly but surely, I was stopped out of those real estate positions. For the most part, at a profit, but now we're out of real estate. And so if you want to see a summary, a sector strength summary, if you scroll here and go to market timing, and then you go to the daily timing summary, this is very convenient to watch on a day-to-day basis. It's a color chart that shows you the strength of all the sectors. So if you want to see how the sectors are doing, you just look over here to the left. There's the Vanguard Total Index and the S&P 500. And then these are the S&P 500 sectors. And you can see that utilities has been under pressure for a long time now. And utilities do well when interest rates are low, but they do not do well when interest rates are high. It's a very expensive business to run, and they borrow a lot of money that affects their bottom line. So in a environment where interest rates are increasing, utilities are not what you want to own, and you can see that showing up quite clearly in this sector strength. For the most part, all of them turned yellow or green over the last week, with the exception of financials. And that makes sense, right? Because interest rates are going up. That means bank can charge us more to borrow money, which immediately gives them a higher top line, which makes their earnings go up. So you would expect the financials to do fairly well. And as a matter of fact, if you take a look at the portfolio for this week, or best stocks, you can go to the Stock Watchers updates. And in here, you'll find a pre-screened list of stocks that are earning the most and growing the fastest. And if you scroll through here, as a matter of fact, let's just click on sector here. You can see cyclicals are doing well. And let's see if I can get to financials. So you just talk about the financials, Allstate, APO, BAP, they're all sort of in this list somewhere. Here's another 10 of financials that are considered best stocks, at least considered best stocks by me to pay attention to. Here's another, 8 in here. So you would expect financials to be doing well. And so that's the market in review. Let me just jump back to the strategy section here, because I just wanted to go through this. And for this week, I'll repeat what I wrote 2 weeks ago. I think this is a week to just sit back and watch the action. Like I mentioned, about 1/3 of the stocks were sold out of the portfolio. We did a little bit better during the week than the S&P 500. But I suggest you watch these support levels very carefully before you start deciding whether to get back in and buy stocks. And if you do buy stocks, I highly recommend the financial sector, and you can find those stocks on this webpage. That's it. Again, it's Jeff Green from profitable-investing.com. I'm going to watch the Super Bowl. I don't know who's going to win. I don't have a favorite, but I hope your favorite team wins. And we'll see you at the same time next weekend. Have a great day and a good week trading. Thank you. Bye-bye.